My name is Peter Mueller. I'm the founding partner at Breakwater Ventures. We are a pre-seed and seed fund based here in Seattle. I have much more technical depth than I would say those in many areas, but I think one of the biggest deficits that founders have here is oftentimes their ability to sell. Yes, it's impacted the way that we evaluate startups, specifically around competitive dynamics and how well are they able to, specific startups, how well are they able to truly provide ROI and value to the end customer. I think that there's a lot of AI solutions that are out there now that are very brittle and aren't able to truly provide that ROI to whether that be SMEs or enterprise, but it's not realized in the way that a lot of the purchasers want to see. There's a lot of the low-hanging fruit, I would say, when it comes to, there's a lot of interesting things that are happening in accounting, media and design, replacing, I would say, specialized software development processes, database migration, cloud operations. If you can refine and define a very kind of niche function within an organization, it becomes much easier to replace that with AI, as long as the complexity of that operation doesn't require too much permission and too much oversight or bureaucracy. That really creates a great opportunity for someone to develop an agent to automate that work. People don't think big enough. And I believe that might be a function of a lot of the talent coming from big tech here. I also think that we don't have as much of a, say, middle layer of companies. We have a lot of startups. We have great enterprise companies here, but we don't have a lot of this middle area of companies to where startup talent can go and kind of move horizontally within startups. But once that startup either shuts down or has a successful exit, we're missing a middle layer of companies here. We have the enterprises, we have the startups, but we're not cultivating technical talent as much as we can. What happens is that a lot of people will try a startup, and then if that succeeds or fails, they'll go right back into big tech. And we need a middle layer so that when someone is done, when a startup either does really well and exits or it fails, that talent can go into another company rather than being siphoned off by big tech and forever gone in the golden handcuffs. Great, you took your lessons learned from a startup and it went, but those learning and learned experiences aren't being brought back into the startup ecosystem. They're going into large corporations. And there's nothing wrong with that for the individual, but I think for the ecosystem of startups, there is something inherently wrong with that really hinders it. I think in San Francisco, there's a much more wider swath of opportunities to work at companies available to where if you just want to work in startups for your whole career, you absolutely can. And even in specific markets in startups, if you want to be someone that focuses purely on consumer tech, you can do that in San Francisco. Now, I picked a weird one there, but you won't have, if you're looking to do a consumer startup in Seattle, which is by itself hard, but if you're trying to, okay, that didn't work, I need to go to another consumer startup, there's not going to be that many, especially that have scale and are willing to, hire you and not, hey, come and be a co-founder here. There's not enough players within the investing community. I think that in the Bay, there is something that I would call the opportunity cost of capital. Let's say you're one fund, you look at a deal, you have an understanding that if you say yes, if you say no, that company's going to go to a ton of different funds of which their calendar is booked full of. We don't have that in Seattle, to where if we say no to someone, we don't have this certainty that their entire calendar's booked full of additional pitches. The opportunity cost of us saying no is much, much lower than someone in the Bay. And I think if we had more capital and more players in the region, then you would kind of see this more competitive dynamic surrounding investment and making more risk on capital, risk on investments, than what we have today, which I think is a lot of risk off venture investments, especially at the earliest stages. That's such a great question. I'm very curious as to how the rest of the night leads you with that one. We've seen a lot of different companies try and enter the space, Humane, Rabbit. There's also kind of up-and-comers. We've looked at 2 of them. There's Friend, there's Omni, there were a lot of different competitors, so I'm familiar with the space. I think it's smart that they're getting into it now, and I think some of the others that will be successful in this, in the sense that OpenAI has the ability to take as much risk as they want and really reducing the risk of putting this in market. But for them, it's, you want as much data as you can. We're already running into data exhaustion. Synthetic data is okay. It's not fulfilling the need for LLMs and to improve kind of model performance. So this is a great opportunity for them to provide the market with a product that gives them nonstop interpersonal communication. And I think for the consumer, albeit it's very Orwellian, depending on what, how techno-optimist or techno-pessimist you are, but it could provide you great insight as to how you are carrying yourself as an individual. Did you forget something? Like, now will I ever buy it? No, because I want the plausible deniability that I did forget what my wife told me, and maybe she didn't say that. Ooh, pinheads.